Welcome to the Liquidity Detective. This video is for educational purposes only and does not constitute financial advice. Past performance is not indicative of future results. All trades shown are real, but your results may differ. Now let's look at the trade that shouldn't have worked. On the 24th of June, I bought a stock at 26.89. The following day, I sold at 29.57, nearly 10%. One trading day. Here's what makes this interesting. That same morning, the company missed earnings, missed revenue, cut its full-year guidance. Every headline was bearish. Most traders were expecting another leg down. Instead, the stock reversed and pushed higher. But there was one chart that made me ignore every bearish headline. I wasn't looking for good news. I was looking for a stock trading significantly below what I believed it was worth. This company had been falling for months. The RV market was weak. Consumer spending was cautious. Dealers were holding back orders. On the surface, there was nothing to like, but valuation doesn't care about the news cycle, and this stock's valuation had reached a level I had never seen before. For over a decade, investors usually valued this company at around 2 to 3 times book value. And then, at the point I entered, 0.61 times book value, the cheapest reading on this entire 15-year chart. The stock was trading below what the company was actually worth on paper. Price had returned close to the 2025 lows, but the valuation was even cheaper than it was back then. That's when I started paying attention. Valuation tells you a stock is cheap. It doesn't tell you when to buy. Price fell into the support zone. Volume exploded. Why would millions of shares suddenly change hands at the exact level everyone wanted to sell? Because that's where millions of shares actually changed hands. That told me large participants were active at this level. A green triangle appeared, the signal that a structural low has been swept and large participants are exchanging shares at this price. I didn't buy because of the sweep. I bought because the stock was historically cheap. The liquidity confirmed it. Value identifies the opportunity. Liquidity confirms the timing. Here's where it gets interesting. Earnings came out the same day. The earnings miss convinced thousands of traders that the breakdown had finally arrived. Shorts piled in, but the market had already done its job. Months of falling price had already priced in far more pessimism than the actual earnings showed. When the bad news arrived, the selling pressure had largely been exhausted, while value-oriented buyers were prepared to step in. Look at the 4-hour chart. First, the longs got stopped out. Price swept below the lows. Then the shorts piled in after the earnings miss, expecting more downside. And then institutions absorbed every share. Volume surged. Price reversed sharply. The shorts got squeezed. Price expanded higher. This wasn't bulls beating bears. This was the market taking liquidity from everyone before making its real move. Entry: 26.89. Exit: 29.57. Just under 10%. One trading day. The news was terrible. But the news wasn't what mattered. News tells you what happened. Price tells you what people did. Liquidity tells you what the largest participants were willing to pay. When value and liquidity align, that's when I pay attention. Cheap stocks can stay cheap, but when those two things meet, the risk is lower than it looks, and the opportunity is bigger than the headlines suggest. The trade is over, but the investigation isn't. The stock is currently trading around 31. The liquidity zones we're watching now sit between 28.72 and 29.29 and 26.52 and 27.08. If price pulls back into either of those areas and volume confirms, that's when the next opportunity could appear. The process doesn't change. Find the value, wait for the liquidity, let the crowd do the work for you. If this is the kind of analysis you want to see more of, real trades, real charts, real explanations, then subscribe. Every video on this channel is built around a real position. No predictions, no hype, just evidence. I'll see you in the next one.